One more interesting company is, of course, Borosil Renewables. Subdued set of numbers for the fourth quarter. And actually, FY24 has been pretty tough, right? We'll put the numbers up on the screen for you. But let's welcome in the management. We have Mr. Pradeep Kheruka, chairman of the company, with us. Mr. Kheruka, good morning. It's always great to speak with you. Prashant this side. You mentioned in your sort of presentation as well that the dumping from China after the removal of the duty in August of 22 essentially is completely sort of turned things in a negative way for your business. And it's not just your business, but others in the sector as well. And as a result, of course, FY24 has been a pretty tough one. How has 25 started? And what can we expect, sir? On a standalone basis, for example, margins have fallen to about 12% compared to some 26% the year before. What are expectations for 25?
Well, there's a saying in English that says one man's meat is another man's poison. So the problems with shipping in the Red Sea have caused an increase in freight rates. And freight rates from China to India have risen from some $700 a container to now $3,500 a container, causing the landed price to rise. And what sometimes the basic customs duty cannot achieve, or non-implementation does not achieve, is achieved by a change in the logistical cost. So I would say that the year has started with a situation where the price of imported solar glass is higher than what it was, say, during most of last year. And that means that we get a better price realization. So it started off well. I would say that in Europe as well, which is where we have some 350 tons per day, the government is finally getting into its act together, and they are yesterday passed some law that says that they're going to action the provision of solar power from domestically produced modules and domestically produced components. So with that coming up, we would be in pole position to supply that demand. We've had a rough time in Europe as well. And fortunately, the good thing both in Europe and in India is that we have a first-class manufacturing setup. We have a first-class team. So if the demand is there, we are ready and waiting for it.
Could you put numbers to it, Mr. Kheruka? What would this mean? India's looking better. That's interesting, the tariff bit that you spoke about. So that's causing the landed price of imported solar glass to be much higher. So, which means you're in a better competitive position. Europe is looking. So what's the number? Give us some numbers, sir, for 25.
That's one thing I never do. I never give any kind of number which is predictive. All I can say is that there are two things. One is that I've been meeting people in government across different ministries and so on. I have been given assurances that the basic customs duty on glass, which is about 15%, which is not small, was set to be, there's an exemption circular, which is exempting imports from duty. And that exemption was going to end on the 31st of March. But that circular has hundreds of items in it. And they decided to postpone the whole thing till the 30th of September. And they wanted the new government to decide what to postpone, what exemptions to remove, and what exemptions to retain. So I've been told that the exemption on imports of basic customs duty, so far as solar glass is concerned, is definitely going to be removed. We have to keep in mind that in the year 2022, we were the only company actually manufacturing and supplying solar glass in India. Today, there are 5. So with from about 180 tons a day in India in 2019, we're up to 2,300 tons a day with 5 companies. So the 5-year anti-dumping duty that had been imposed in 2017 caused an increase in production by nearly 13, 14 times. That is the power of the tariff for you. And the strange thing is that imported cells are 25% duty, imported modules are 40% duty. For some reason, glass got left out. But anyway, that's going to be corrected. So we are looking with confidence to the future.
All right. Hi, Mr. Kheruka. So You're sounding optimistic about the future, which is always a good thing. And you're saying the policy measures as well could support you. So your shareholders will take heart from that fact. You know, you had commissioned your SG3. So as of now, the India utilization levels are at optimum levels?
We had commissioned a furnace which was 500 tons a day. So we are drawing
Yes.
500 tons a day from that already. But being Indian, we are not happy unless we're drawing 550 tons or 575 tons from that furnace. So all of that is in progress. So I would say we hit rated capacity fairly early. And we're going, we're producing and selling everything that we make. On the 31st of March, we had you could play football in our warehouse.
All right. I like the way you put that, Mr. Kheruka. You know, the reason I asked you is because what about SG4 then? You know, you had plans earlier. It was postponed, I think, a little bit. So two-part question. One is you have taken an approval to raise some money, which could possibly be by the rights issue route. So tell us, what will you use this money for? Will it be used for additional capex, or will you be looking at paring down some debt? Give us some clarity.
We're likely to pare down debt. We have a total of about 500 and something crores. We'd like to see debt at about 200. So, you know, that would be very comfortable for us. And that would give us, frankly, we are all ready for another 1,000 tons or another 1,200 tons. Our batch house is good for 2,000 tons. We're only drawing 1,000 from it. Our electrical installation is 45 megawatts, which is good for another 1,200 tons. So these are two important items of capex, which we have already been able to sort of spend, and it's there in reserve. So the next furnace was not going to have as high a capex as a new furnace that somebody else would set up.
Got it. So you're looking to, sure. So sorry, Mr. Kheruka, this is Sonia. We have just a couple of minutes left before the market opens. I wanted to squeeze in some more questions. What is the market share currently? I think you were at 20% in 2023, but where are we at right now?
The market demand has been rising. The production of solar modules has been rising. It's very volatile. The only thing I can say is that about half the production of other manufacturers is lying unsold, or half the capacity only is being utilized. We are able to sell everything. But, well, we are, you know...
I just wanted that one number in terms of market share, sir.
I would say about maybe 750 tons. I haven't done the homework. The market share for Indian glass is about 35%. So we're still 35%. Importing 65, yes, for all Indian glass. So we're selling everything, and then the balance is coming from the other manufacturers. But with the new schemes, you know, the ALMM that has come in from the 1st of April has given a very great fillip to domestic manufacturing. And the other thing is the Pradhan Mantri Yojana for the rooftop. So 1 crore households are going to get solar modules, all made in India. So the demand in India for glass is going to really rise exponentially. And the question is at what price are you going to sell? And hopefully the price would see better numbers, you know, going forward, more or less immediately, because the land price has gone up immediately.
Got it, Mr. Kheruka. You know, everyone is waiting for the election result. You are too, but you know, there's of course that tariff bit which you said, officials indicating that it's a new government which perhaps will take a call and may come through. You remain confident that something
the indication, sir, is that so far as solar glass is concerned, the exemption is going to go. That's what the indication is. So they'll take a call on the hundreds of other items, but for glass, I think they've taken a call. But we have to see.
Wait. All right. Great conversation, and thank you very much for your time as always here on CNBC TV18. Well, that's Borosil Renewables. Stocks at about 480.